Good morning and welcome to the Scirocco Energy PLC Annual General Meeting presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Alistair Ferguson, Chairman. Good morning to you, sir.
Okay, thank you. First of all, good morning. For those that I don't know, my name is Alistair Ferguson. I'm in my role as Chairman of Scirocco. I'm pleased to welcome you all to our AGM. It's now 11 o'clock and it's the time set for the AGM of the company to commence. There are more than 2 shareholders present and the quorum requirement is satisfied. I therefore formally declare the meeting open. I'd like to start, as is our tradition, just by introducing my colleagues on the board. Tom Reynolds, the Chief Executive, who you already know, to Matt Bauer and now Roberts, the 2 non-executive directors who have joined in the last 6 months, and it's a good opportunity to hear their view and to hear their responses to questions today. I'd also like to mention today is the day that Don Nicholson steps down from the board. It was agreed some time ago that Don would step down as an independent non-executive director at the AGM, and that was something that was in train for some time. We will shortly have a presentation on the company's current business and where our current activity set is. But before that, I would like to start by just setting a bit of context for our discussion today and for the AGM, and almost setting the scene for today's meeting. So, in terms of, I think Scirocco has made good progress through this year as we announced, and progressed to complete the transformative divestment of our interest in Rovuma. The divestment of that legacy interest followed a strategic review that concluded that the best way to deliver long-term sustainable value to our shareholders was to remove exposure to oil and gas investments in challenging jurisdictions, and instead channel investment into attractive assets within the European sustainable energy and circular economy markets. It is in that space that we see strong drivers, a plethora of opportunities, much greater investor demand, and subsequently better access to growth capital, which is of course a critical component of being a listed investment vehicle. The Rovuma transaction is nearing completion, I'm pleased to say, and we have now received the tax clearance from the tax clearance certificate from the Tanzanian Revenue Authority, and are waiting on the final step, which is a ministerial approval. Approval will be the final condition precedent of the SPA, clearing the way for the completion payment of $3 million to be made immediately, and the first contingent payment will follow in the 4th quarter of 2023 of this year. This will be a watershed moment for the company, placing us on a solid financial footing to explore and evaluate opportunities in the energy, circular and vector sectors. Symbolically, it will only be at this point that Scirocco will have completed its transition from an oil and gas company to a business positioned to take advantage of opportunities in the growing energy transition sector. We firmly believe that the strategic streamlining of Scirocco's investments and final exit from the legacy investments of what was historically solo oil will broaden the appeal of our investment proposition amongst a significantly wider pool of prospective investors, and we look forward to forging a new profile as a focused and ambitious company motivated to create sustainable long-term value. Now, although Rovuma puts us on a solid financial footing and provides funds that can be reinvested, we believe that the quality and quantity of the opportunities screened in our business development pipeline can best be exploited with additional capital. In reality, we will require the proceeds of the first contingent payment to be in a position to consider any meaningful transactions, and even then, the scale of these opportunities may not be high enough to generate proper relevance in the capital markets. Now, whilst we fully acknowledge the reluctance of certain shareholders to be exposed to equity dilution, We believe that shareholders would have a smaller interest in a considerably more attractive vehicle, and a vehicle that can gain more traction and profile in the capital markets. Ultimately, Scirocco's future business development pipeline is substantial, and many of these opportunities are time sensitive. This has already been proven through a previously announced exclusivity on an AED plant falling away due to Scirocco being capitally constrained. We believe that failure to capitalize fully on the market dynamics and competitive advantage that we currently possess through our JV with EAG will result in both lost opportunity and lost value. Our investment in the EAG JV and ownership of GGL provides a good template for the type of opportunities available and the operational and financial performance of that asset since acquisition. It clearly demonstrates the value upside that can be achieved through these assets and the capability within the JV to extract it. Assets of this kind are both stable and profitable, thereby providing the risk profile we are seeking through Scirocco's growth strategy. In parallel with moving Rovuma towards completion, overseeing the AEG investment and progressing the business development pipeline, we have placed a heavy emphasis on cost control and cash management. The board and advisors have taken action to significantly reduce costs over the last 12 months. The aggressive plans to preserve cash in the business to support completion of Rovuma resulted in all directors deferring 100% of their salary and key suppliers agreeing to defer retainer fees. This has been effective, and I'd like to thank both the directors and the suppliers for their alignment through this period. Now, while such a low annual cost base is not sustainable on a forward basis, we will endeavour to operate on a lean cost base that enables the business to operate effectively without compromising the ability to grow value for our shareholders. We will continue to implement initiatives to minimise fixed board costs, such as our attempts to seek the flexibility to issue share-based remuneration, minimising cash costs and further aligning directors with shareholders. Finally, the Scirocco's board continues to evolve to reflect the strategic direction of travel. The consistent objective is to ensure that the company has access to the skills and experience to deliver on the investment strategy and grow the value for shareholders. With the completion of Rovuma and the receipt of funds that the board will undertake, on receipt of the funds, the board will undertake a review of resourcing and the appointment of an independent director. In the meantime, in consultation with shareholders, we will appoint Matt Bauer as a senior director responsible for liaison with shareholders. With the recent appointment of both Niall and Matt, and them joining the board, we now feel we have the right mix of skills and experience to fully deliver on our transition energy strategy. I'd like to thank both Don Nicholson and Muir Miller, the directors who have stepped down from the board this year, for their guidance and input into Scirocco through this transitional period, and welcome our new directors as we accelerate towards our ambitious long-term growth objectives. Now, the board will also undertake a review of executive resourcing on the completion of Rovuma and in anticipation of scaling up our work on transition energy. So in summary, Scirocco is approaching a key strategic juncture with the impending completion of Rovuma, and it will only be at this point that we can move forward to deliver our strategic objectives with confidence. Your company is exposed to a wealth of opportunities that we believe can deliver long-term growth and value for investors, and it is our duty to articulate the viability and attractiveness of these opportunities so that new and existing investors can appreciate the long-term vision and how we intend to make that a reality. So, with those opening remarks, let me hand over to Tom, and who's going to take us through a presentation just to update you on the company activity.
Thanks, Alistair. Okay. All right. Good morning, everyone, and also good morning to those joining us online. As Alistair says, I'm just going to run through a short update presentation, just really to cover the status of the company and a couple of strategic issues. So let's get underway. So running through the agenda here, Alistair's obviously just given us our opening statement. I'm going to take you through 5 elements in the presentation today. I'm going to cover a reminder of the strategy. We're going to give an update on the Rovuma divestment. I'm going to talk through the Scirocco investment process and specifically look at EAG as an example case study of that process. We'll talk about cost optimization, which Alistair obviously introduced during his opening remarks, and then an element of observations around access to capital, noting that Scirocco is an investment company and therefore needs capital to grow its business. Then we'll go to a Q&A session, and then we'll close out the current broadcast before moving on to the resolutions in the room. So, first and foremost, before we kick into those sections I've just described, I'd like to just cover off the strategic progress made through 2022 and so far during the first half of 2023. What we'd say is this is very much in line with our stated strategy and with that shareholder-approved investment policy. We'll get into this in more detail, but fundamentally, sell legacy natural resource assets and use the proceeds to invest in new sustainable energy assets is the best way I could summarize that. As part of that, the agreed divestment of Rovuma for up to $16 million was agreed with counterparties, approved and then pursued. The delivery of the completion via necessary Tanzanian government approvals, most recently announced last week with the tax clearance certificate being granted. Our first platform investment in EAG has delivered strong operational and financial performance in parallel with identifying follow-on investment opportunities, which we see as a real ratification of our investment strategy and the approach that Scirocco has taken. We've evolved the board. Alistair introduced our new directors, Matt and Niall, during his opening remarks to reflect the stated direction of travel and the resources that the company needs on a board level. Also, as Alistair touched on, aggressively optimised G&A to preserve cash, really optimised around completing Rovuma in the first instance, and we'll talk about more of that in a few moments. And in the background, we've continued to screen opportunities in each of those areas we said we'd invest in: energy, circular and vector themes, and we continue to look at a range of funding alternatives. Again, Scirocco is an investment company, and to be successful and to grow at an appropriate level, we need to be in a position to support investments as they arise. More of that shortly. So we'll move on to a quick reminder of the strategy and investment policy. Many existing shareholders or people who have participated in these briefing sessions before will be familiar with this chart. I'm going to concentrate on the graphic here, which really sets out our stall in where we will seek assets to invest in. The core fundamentals of the strategy is that we want to invest in platform companies which have and behind management teams which have the domain knowledge and expertise to grow a business in each of these areas. EAG, we'll come on to talk about in a few minutes, is a really good example of that in the anaerobic digestion space. But basically, we are looking to deploy capital into businesses that have asset bases which are cash generative in the sustainable energy environment or low carbon environment that fall into one of these 3 categories: energy, circular and vector. And as it says on here, energy are assets that are fundamentally involved in creating energy, usable energy for society through low carbon means. Circular assets focus on the recycling or recapture of valuable components of waste streams, whether they're industrial, agricultural or basically domestic. And then the final one is vector, which are assets which are involved in the storage or transfer or transmission of energy in a low carbon setting. And that kind of really is quite a broad church. And so far, as we'll talk in a moment, anaerobic digestion would fit firmly in the energy space, and some of the potential augmentations that we've discussed in the past in terms of processing digestate material would fall into circular. Really just to focus in on that, what are we trying to do here? We want to work together with management teams that know their business area, have a portfolio of target assets to get after, where we can provide necessary capital for their businesses to grow, alongside support, advice, and broader investment experience to assist the companies growing in a faster way than they would otherwise. The graph in the middle is intended to show that how you acquire a series of assets numbered 1 through 6 here, based on a combination of equity applied alongside acquisition debt. These assets are intended to be cash generative and therefore can support acquisition debt. Working with the management teams in question, we look to deliver upside from the assets, which is appropriate in the context of these specific assets. And by delivering a larger, better performing business, there's an opportunity to re-rate valuation, which delivers an uplift on your equity investment. And I think the critical point, which we'll reiterate a number of times through the presentation today, our investment model is to invest in a company at point A, help it to grow through the application of capital, and then a larger company at point B is sold so that Scirocco's investment as a result is increased and we monetize that at exit when the company is sold. EAG, we believe, represents a really good example of this, an experienced team with deep domain knowledge in anaerobic digestion markets and technology, strong pipeline of opportunities, a clear path to add upside. We've already mentioned the digestate management issue, and monetizing that, and the ability to attract appropriate leverage into acquisitions. So on the basis that as a reminder of the strategy, effectively to continue with the planned conversion of our legacy assets, monetize those, and then redeploy that capital into sustainable energy investment, an update on the Rovuma transaction. First, just remind everybody, summary of terms. After we agreed the planned divestment originally with Wentworth Resources PLC in June, it was then preempted by Ara Petroleum Tanzania, and we entered into fully termed agreements on exactly the same terms with them in August 2022. The sale arrangements are effectively predominantly back-ended through the provision of contingent payments, which are listed here. And I think an appropriate point to look at here is when we expect, or when we can reasonably estimate that we would receive payments. At completion, Scirocco is due to receive $2.5 million, and that's the $3 million completion payment net of $500,000 advance that was paid at signing. Following on our announcements last week with the delivery of the tax clearance certificate, we really think we're motoring on, and we expect to see that in Q3 2023, i.e. imminently. The next payment is tied to the final investment decision on the Rovuma field. Given that the asset is scheduled to deliver first gas in December, we believe we'll receive that payment, and the FID decision that triggers it will be made during Q4. Therefore, that's the best guess we can get on that income. And then the bulk of the remainder of the money to come in is tied to a revenue share, which will obviously follow 1 month after first gas is delivered to buyers and paid for in Tanzania. So we're estimating that will commence during Q1 of 2024 based on the currently advised development timeline. An important point, and I think it's important to just restate it here just to make sure, because we do occasionally get questions about this. Part of the sale arrangements, the counterparty APT advanced a loan structure to Scirocco to cover the cash calls during the interim period from the economic date until completion. And there's two dynamics to that. One, it means that Scirocco did not have to fund those cash calls, which as of the 30th of June, just under $4 million had been drawn against the cash call loan facility, including a very small amount of accrued interest. Those cash calls are added to the valuation of the deal, and at completion, that increased valuation is then offset against the loan amount. So I want to be really clear about this, that loan amount should be cancelled out about the increased consideration at completion, which is effectively the stated completion summarised below, plus the costs incurred on the asset during the interim period. So it should effectively offset, and that means that the amounts listed below are the amounts that Scirocco will receive. So I think that's a really important point that hopefully by making it again is clear, because we consistently get questions in about the loan somehow undermining the cash we will receive, which is not the case. So, summarise on Rovuma, we're really motoring towards completion. We believe it's imminent, and the sale of that asset will provide a source of cash to the company, which can be reinvested over time, but we are subject to the timeline of those receipts, as I've just described. In terms of progress to completion, I've touched on some of this already. We've made really significant progress, and the delivery of the tax clearance certificate from the Tanzanian Revenue Authority last week was a very significant step forward. And so effectively, we've now approved the submission to the Minister of Energy for the final step of approval by the Tanzanian government, and we're working very hard on getting that in front of the right people right now to get final approval to move forward to completion. And basically, we're working very closely with our counterparty, who has people on the ground in Tanzania as well, to deliver completion as soon as practicable. So we've covered Rovuma in the context of our strategy of divesting legacy assets. We wanted to give people an update about the Scirocco investment process, effectively using our investment in EAG as a successful case study. So as the title says, demonstrating Scirocco's robust investment model. I think the first key thing to clarify and establish at the starting point is that EAG is a separate and distinct company from Scirocco. It is a company in which Scirocco invested funds to support their plans to acquire anaerobic digestion plants. And as such, we set out for it to be the first of our investment platforms in the energy space, and the plan for the business, according to those three pillars of investment that I described earlier, that we would pursue other parallel investments in other companies in a similar way. I'm not going to run through every point on this timeline chart, which people are very familiar with. A couple of things to stress, which are in the bolded boxes here, that as part of our planned investment structure that we entered into with EAG, we appointed 2 directors to the EAG board to support all aspects of the business plan and to manage it from a governance perspective on Scirocco's behalf. And I think the key thing in terms of status is that EAG has delivered by operational and financial performance through its investment and acquisition of the Greenan plant, which we've covered in regular updates over the last 18 months. It's also developed a very interesting backlog of opportunities to invest in through other acquisitions. Now, and that's obviously subject to the access to capital, which is a theme that we will explore further as we go through this presentation, and I'm sure in the Q&A discussion. So I think to summarize where we got to here is that I would say the investment in EAG has delivered completely in line with Scirocco's stated strategy. To capitalize on the opportunity presented now, a backdrop of solid operational and financial performance on the asset they own and a backlog of opportunities, Scirocco needs to access capital to support further acquisitions and follow-on investments as they arise. So moving on, a reminder of the unit economics that effectively Scirocco invested behind when it chose to invest in EAG. And the result described by the graph on the right is effectively what we felt we were pursuing. And it's been augmented, in partnership with EAG over the last 18 months to add potential other additional steps. First and foremost, buy an asset using acquisition debt and optimize its performance. Then we seek to augment its performance by adding other things. The green bar on the left-hand chart, that augmentation relates to the potential investment you can make on an AD plant to process its digestate and turn it into a valuable biofertilizer. And you can see a very significant uplift in value as a result, principally because of the additional EBITDA that's developed from a plant of that type. The right-hand side shows an estimated or example end-to-end value for your investment, which takes the numbers from the left-hand side. The green bars represent equity invested. Total investment, somewhere around £3.5 million alongside around £2 million of debt. Total value based on the full pathway of buying the plant, optimizing it, and augmenting with biofertilizer, gets you to an indicative value of about £9 million, and that's based on current market multiples of EBITDA. Take off the debt, and you're left with equity net value of £7 million. So effectively, what we're showing here is that there's a pathway to turn invested equity into a multiple of invested equity at these unit economic levels. And so far on the operational performance and the backlog of opportunities that EAG has identified, the team there are ratifying our strategy in that our investment policy was pursuing this result, and everything they are doing lines up with being able to deliver this result. And so finally, just to restate that point about value and why does Scirocco invest, fundamentally value accrues to Scirocco at exit when the businesses it has invested in are sold and money comes back to shareholders. And so the critical benchmark for investment success is start to finish cash on cash. And the investment agreement that Scirocco designed at the outset was intended to provide a distribution of returns on sale to provide us with our investment return at exit. This has been used in a couple of other presentations, so some listeners may be familiar with this, but the proceeds are effectively distributed on the sale of EAG along the principles described first, second, and third. First, to allocate 100% to Scirocco to repay its loan. Second, to allocate proceeds in a 75-25 split until Scirocco reaches 2 times money of all sums invested. And then third, equity distributed in equity proportions between Scirocco's share and the EAG founders. So what that waterfall ensures is that Scirocco gets its investment back first, and then a preferred return alongside EAG founders. On the right-hand side, we've got an illustrative distribution at 3 different sale enterprise values. And obviously, enterprise values, you need to take off the debt and then distribute that through the waterfall. The example waterfall calculation has been carried out based on a 5 million sale enterprise value, but there's a little table at the bottom which shows for indicative purposes. So I think the key point here is that this was by design. At the outset, Scirocco entered into a structure that was designed to provide for this outcome, and this is the same structure that we would expect and intend to work with any other parallel investment going forward. So basically, just a recap of where we are. We've gone back to strategy. We're turning legacy value in natural resource assets into investable capacity in sustainable energy. EAG is the first example of which, and so far, based on EAG's performance operationally and financially, and a backlog of opportunity, it's ratified the structure and the investment process that Scirocco has followed. We are aiming to replicate that in a number of other parallel situations going forward. Alistair, in his opening remarks, mentioned cost optimization. I'll touch on that very briefly here. And when we say optimize, what do we mean? We're optimizing to get to the completion of Aruma. It's a key watershed result. It takes a big step towards removing the last material asset that we have in natural resources, and it puts cash in Scirocco's pocket and will deliver more cash through those contingent payments going forward. In terms of the slide, there's a lot of points here. I think the main ones I would make is that going forward, there's a number of costs just by virtue of being listed are mandated as a result of being listed. And those are effectively summarized on the right-hand side. And that's a ballpark estimate. You can apply error bars to that, but it tells you that going forward, there's a kind of minimum reasonable level of costs that a listed company may incur, particularly if it wants to be sustainable and moving forward. A comment on run rate consulting costs, which we've covered in previous presentations, but just to note that they have been significantly reduced as a result of significant contracts ending during 2022. Main one of that was a contract for business development support and due diligence support, which was terminated in Q4 2022. So those costs are very firmly in the rearview mirror. A large chunk of 2022 costs were also related on a one-off way to the Rovuma transaction, and they sum to about £350,000. And there was also significant one-off costs during 2022 associated with shareholders' actions. So that's additional legal support, additional financial and audit support for inquiries that were placed by shareholders into the Financial Reporting Council, and everything else, all of which ended up with no action, no wrongdoing, and a clean bill of health, but still the company had to resource and incur costs in doing so. So key point looking forward then, to be appropriately resourced to deliver the strategy, the company will need to review resources required following the Rovuma completion. This links to what Alistair said during his opening statements, that it is a watershed moment, and at that point the company intends to carry out a full review of, to deliver the investment strategy, what do we need in terms of board lineup, executive lineup, and other support to then move forward. Final point on this, and it is a significant item in the whole cost landscape that shareholders should be aware of, that, and I anticipate some questions on this, but Resolution 7, it's important for people to understand, Resolution 7 has been proposed to provide a specific authority to issue shares to settle salary fee deferrals by directors during the period 2020 to 2022. The purpose of those deferrals was to retain cash in the business, and all directors effectively elected to do so. And to settle those deferrals, they were awarded with options as effectively on a like-for-like basis. Resolution 7 is proposed to provide the necessary capacity to issue those shares against those options. I think it needs to be very clearly stated that in the event that that resolution is not approved, the company will then be required to cash settle those options, and an estimated total cost of that, if and when those options are exercised, is around £500,000. So it's a very important data point for everyone to be aware of. So I think, finishing up on costs, we've optimised costs specifically to get to Rovuma completion. Alistair mentioned a number of ongoing deferrals by both directors and suppliers, which is very gratefully acknowledged, to get us to Rovuma completion, at which point we will have cash. And the next step post Rovuma completion will be to review the resources that we require to deliver the investment strategy point forward. And the final point, again linked to the resolutions that have been proposed for the meeting today, is around access to capital. And so I'm going to walk through this in a bit of detail just so everybody understands the outlook. Fundamentally, Scirocco is an investment company, and its business is applying capital to other businesses to help them grow in size, grow in the value, and then harvest that value in due course when those businesses are sold. A key thing about that landscape is that in order to be able to engage in opportunities, you can't ask opportunities to wait on the shelf until you've saved up enough money. You need to be able to deal with those opportunities as they arise. And I think that's a key theme that you've heard me mention a few times overall here. So breaking down the cash receipts that we already talked about in the Rovuma sale, $2.5 million at completion, $3 million on FID approval, which our estimate is sometime in Q4 this year, $8 million of revenue share following first gas. So our best estimate is that those funds will start to be delivered from Q1 2024, and they will then accrue as we go through the rest of the year and probably into 2025, depending on production rate. And then there's a final one-off payment, an upside payment when gross production from the entire field exceeds 50 BCF. At this point, until we see production, it's very difficult to estimate, but it'll clearly be out beyond that timeline that I've just described. So the purpose of Resolutions 6, 7 and 8 are proposed to ensure that Scirocco has the flexibility to issue shares to fund attractive investment opportunities as they arise. And I think I can't really say it any plainer than that. The board's intention is very much to keep a direct and open discussion with shareholders around what represents an attractive investment opportunity as we move forward. But that is the purpose of certainly Resolution 6 and 8. Resolution 7 I've already talked about in the context of the option piece. So let's look at what a typical investment might look like. A minimum unit size, in our view, is around £1.5 million. Now that corresponds to the equity component of acquiring a green and equivalent AD plant. That would be the equity requirement that EAG would require and Scirocco would be required to fund. So that's the minimum equity requirement. Based on our forecast cash position post Rovuma completion, and without the ability to raise funds through the issuance of shares, then the ability to invest in that typical unit size is restricted until we receive that $3 million FID payment sometime in Q4. So I think, I'm going to restate that just to make it clear. Post Rovuma completion, it is very unlikely that we would be able to invest in our minimum unit size identified there until we receive the FID payment sometime in Q4. Also, the consequences, with the absence of any other way of raising capital, the company can't make any binding commitment to invest. So it ties our hands in some respects in terms of engaging with the market. And then obviously it goes without saying, but I'm going to say it anyway, anything more significant than that minimum size will then need the company to see more capital coming in from Rovuma. So that basically defers its ability to invest in anything more meaningful into 2024 as those revenue share payments start coming in. So just making it for absolute clarity what the investable position of the company will be absent in Resolution 6, 7 and 8 being approved, we'll have to rely on the Rovuma. That's why we put forward Resolution 6 and 8 in particular. It also allows the company to signal to the market that we're a valid investment counterparty. So in the meantime, we'll continue to screen opportunities within our target sectors of energy, circular and vector. That work goes on regardless in the background, week in, week out, month in, month out. And I suppose, how would I summarize this? Rovuma does provide the company with necessary capital to invest, but only as that money comes in, and therefore that will set the tempo and pace and scale of investment that the company can pursue without access to additional capital. Again, that's the reason we put these resolutions forward. And as the strapline says here, to summarize all of this, without access to capital as the need arises, the pace and scale of investment will be restricted. And also the company will consume more G&A whilst waiting for sufficient cash to accrue, which ultimately will erode shareholder value. It's less efficient to sit and incur fixed costs waiting for money to turn up to make the investments you want to make. Okay. So very quickly, conclusions, and then I'll hand back to the moderator and we'll get into Q&A. But the key conclusions really I want to talk you through, really just a recap here. So Scirocco is delivering against its strategic objectives. We're monetizing our legacy assets and we're releasing investable funds, and we've already demonstrated that we can put them to work. Rovuma divestments made very significant progress, including just in the last week, and we're on track for imminent completion in Q3 2023. Our investment model, we believe, has been validated by our position in EAG, and we've established a broad pipeline of parallel prospective investment opportunities in each of those areas, energy, circular and vector. We've actively optimized costs, focused on Rovuma completion, and post-completion, we plan to review all costs and resources required to deliver our strategy point forward. And the board will continue to pursue the investment strategy. On a deal-led basis, we will approach shareholders regarding access to capital and funding, as I've already mentioned. So with that, I'm going to stop talking and turn over to questions.
Tom, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. As you can see, we have received a number of questions throughout today's presentation. And Tom, if I could just ask you to read out those questions and take them where appropriate to do so, I'll pick up from you at the end.
Sure, thanks. Okay, so first question, why are there separate resolutions on 7 and 8? I think I touched on this in the presentation. So just to be clear, both resolutions 7 and 8 are special resolutions requiring a 75% majority of those voting to approve, because they propose to disapply preemption rights, which would allow the company to issue shares without offering them first to shareholders. The reason there are two separate resolutions in 7 and 8 is, as already touched on in the presentation, Resolution 7 is to provide a specific ring-fenced pot to satisfy the requirements that have accrued through salary deferral by directors during the period 2020, 2021 and 2022. And as already mentioned, if those resolutions were not to pass, particularly Resolution 7, the company would have no option but to cash settle those options and obviously consume valuable cash that could have otherwise been settled by issuing shares. Resolution 8 is a general allotment on a non-preemptive basis, and that is effectively creating a pot. And as we said in the AGM notice, that's to create a pot of investable capital that could potentially be raised if the board, in consultation with shareholders, felt both an investment opportunity was compelling enough and that was a good way of bringing capital into the business to grow it in line with its investment strategy. So that's why those are two separate resolutions, two separate pots for two very different purposes. It's a good question. Given you have impending proceeds coming in from Rovuma, why did you table resolutions to issue new equity? I touched on that during the presentation, but it's worth perhaps stating it in a slightly different way. So obviously, Resolution 7, we've covered that. It's a specific pot. Resolution 8 is more of a general application specifically to investment purposes. And the key point here is that we can't rely, I don't believe, we can rely as an investment company on sitting around and waiting until cash accrues in the bank and then going looking for opportunities. We need to be able to respond if a fantastic opportunity turned up tomorrow. My desire and the board's desire is to be able to respond to that and, frankly, to the benefit of all shareholders, capture that investment by having access to capital to put to work. So that is the purpose of putting forward the opportunity. There's also a slightly more subtle point, which it signals to the broader market that Scirocco is a viable investment counterparty which has access to the public market to raise capital in due course. Without that, you clearly remove one of the key benefits and purposes of being on the listed market. And it's very difficult to sit opposite a counterparty and have a discussion about investment on a credible basis when, in a very public way, you don't have access to that public market. Okay. What is the best way to assess the performance of your investment in EAG GGL? So I think there's two ways to look at this: current and end-to-end, or exit valuation. And that's what I tried to summarize in the presentation. So there are sort of qualitative and quantitative methods that we track and use to understand how our investment in EAG and Green Generation, which is a wholly owned subsidiary of EAG. And obviously, from our perspective, that asset has improved operationally, delivered very consistent uptime results, and delivered strong financial performance. And in addition, the EAG team have surfaced a really interesting backlog of opportunities to invest in, which would replicate GGL hopefully in the future. I think the primary route as an investment company that people should consider the key measure of success is if we put £100 into an investment today, and then in sometime after we've worked with the team and grown the business and it's sold, our intention is that the value that accrues to Scirocco's shareholding at exit is significantly larger than the cost that we've put to work. So it's a cash on cash inception to exit model, and that's the primary route of assessment that I would encourage people to use. Another question related to EAG GGL. How involved is Scirocco in the operational oversight of, I guess it means EAG and GGL, and assessment of the opportunity pipeline? So as I touched on in the presentation, at the outset and when we designed the investment structure, part of that was the governance structure. And the governance structure involves 2 members of the Scirocco board sitting as directors on the EAG board alongside the EAG founders. Those 2 directors are myself, and historically that was Muir Miller. With Muir Miller's resignation, Niall Roberts has been proposed to join the board. I think that's a very helpful addition, particularly linked to Niall's knowledge of the biofertilizer market and broad fertilizer market as well, and given some of what we're looking at in the context of EAG. Okay, moving on to the next question. So regarding December expectation for first gas from Rovuma and the fact that the pipeline build has not yet started, how confident are you that this date will be met? Okay, so we are reliant on the information that the operator APT, who is also our counterparty for the sale of Rovuma, provides to the joint venture during OCM meetings. And shareholders will obviously seen, well, I suspect you will have seen a recent update provided by Aminex, who are also a 25% interest holder in Rovuma. There's a large amount of activity that is being moved forward here to support the December 24 date. We're aware of a number of long lead items that are being managed to support that December 24 first gas date. And all we can say is that at the moment, based on everything we are seeing, it is justifiable and deliverable based on operational work on the ground. I think we have to acknowledge that there may be some error bars on that. You're talking about a project operational schedule, which in any territory will have error bars and can run long. And also, I think we have to acknowledge that mobilizing equipment, people, and material into Tanzania, might take longer. And so there is some risk on that number, but everything we're seeing at the moment supports the December 24 date.
I think it's
23 date, I beg your pardon, 23.
I think it's important to add for our audience to Tom that there's been a kind of step change in the kind of government, in the way the government is handling the whole decision-making process over for Rovuma, and indeed for other kind of oil and gas investments. And I think that's been quite notable, right? I mean, we've been observing this. Tom and I have been observing it for a few years now. And although I would put Tanzania in the class of a very difficult jurisdiction to operate in, I think what we've seen is a much more focused approach from the government. They've laid out a very clear mandate. And it's a mandate to have first gas by December. What we can tell you from the discussions we've had with APT that they are very aware of that, of that deadline. So I think, I'm probably more confident now than I've been in some time in terms of both our approvals, and the approvals we require in terms of ministerial approval, but also in terms of where I think we're going to end up in terms of first gas delivery. Now, whether it's December or January, that's not going to make so much difference. But I can tell you there's absolute focus to get this done, get it now. So,
yeah, good points. Okay, a question from Jeff S. Good morning. Good morning, Jeff. Scirocco still have an asset in Tanzania in Kilowani. What is the strategy for this asset, please? For longer-term shareholders, Kilowani North is an asset that has previously produced in Tanzania. It's operated by our partner Aminex. Scirocco owns 8.39% in that joint venture. Production was interrupted historically and due to a downhole fish, a tool being stuck in the well, and attempts to recover and reinstate production failed. And this is going back to the 2010s activity. The asset has basically been effectively suspended as it currently is. It's not believed that on current basis that because of the remaining reserves in the asset, there is value to fix it and reinstate production. So effectively from Scirocco's perspective, and I stress this is from Scirocco's perspective, it is held on our balance sheet as a contingent liability for decommissioning. And you can find that in our accounts listed against that. The more eagle-eyed shareholders will be aware that some activity is going on in the form of a 3D seismic survey in the general area of Kilowani by another company unrelated to the Kilowani North joint venture. That has the potential of identifying potentially other prospects or other targets. If that happens and the outlook for the asset is basically changed materially as a result, then we will obviously consider our position on the asset. But at the moment, that asset is effectively held as a contingent decommissioning liability, and it's very, very small on the balance sheet. Okay, next question from David B. Equity raises. Will private investors with SIPs or ISAs be able to participate, and if so, how? It's a very good question, David. There are mechanisms to do so. Shareholders and market participants will understand that if a placing was to be carried out, it's typically done through wall crossing various people, bringing them into a book, and then announcing once you've reached a threshold that you want to raise. And sometimes private investors, as David alludes to in SIPs and ISAs, may miss out on the opportunity to acquire shares. There are a number of platforms that have come up recently. I'm just going to use one as an example, which is, I believe, called Primary Bid, which provides a mechanism for companies to reach out to investors in SIPs and ISAs. I stress I'm only using that as an example. I'm not suggesting that's a pathway for Scirocco, but there are mechanisms, and we will look into it and consider how that can be delivered in the event we come to raise capital in the future. Question from Matt S. If the EAG plants are such a good investment return, why are bank loans not available to the company to procure such assets? So I have to correct the questioner here. Bank loans are absolutely available to assist in the acquisition. When EAG acquired Green Generation Limited, there was incumbent debt that was actually rolled over at that time. And EAG has been working on the refinance of that loan and has recently delivered on that by refinancing the debt on GGL with a very significant well-known bank. So debt is absolutely available to support AD plants, and that's by virtue of the nature of the revenue streams. A significant proportion of the revenue streams on AD plants are backed by government, index linked, and are paid on a monthly and quarterly basis. So that very much lends itself to banking support. And that was one of the attracting things that brought us into the space in the first place as Scirocco, that we felt we could leverage our equity through reasonably priced debt. Okay, so turning to the room, are there any questions in the room? Those are the last questions online. Okay, Alistair.
I'm sure you have a question, Roger. Yeah. Okay. First of all, to thank everybody who both joined the presentation and our shareholders that were online. We appreciate the interest and engagement with the company. And I hope we've provided, or got some way to provide a good update of where we are, the opportunities we see in front of us, and the strategy we're implementing. In terms of closing remarks, I'd just like to, before we move on to the more formal business of the meeting, I'd just like to reiterate what a year of progress we've seen and how that recent progress towards Rovuma completion leaves us on the cusp of finally completing our strategic transition from a natural resource investor to an investor in sustainable energy assets. And I truly believe that this is a watershed moment, which will transform our appeal to a significantly broader audience. Now, the proceeds of that sale strengthen our balance sheet, and the first contingent element will strengthen it further when received, as we said, in the fourth quarter this year. However, we continue to make the case that to truly accelerate the growth of this business in line with strategic objectives, then we should have the flexibility to raise growth capital through the issuance of new equity, as the limitations of what we can achieve and how much appeal we can generate in our investment story on those Rovuma proceeds alone. I think we have a very compelling pipeline of opportunities to go after, and the only constraint stopping us converting that pipeline into value-accretive transactions is capital. In the meantime, we will continue to focus on the key issues of cost discipline, good governance, and transparent engagement with our shareholders. I look forward to communicating our progress through the second half of this year.
Perfect.
So, thank you.
Perfect. Alistair, Tom, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. It's only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Scirocco Energy PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
3, 2,